Hey, and thank you so much for tuning in to Wednesday Money with WealthyMe. My name is Regan Mitchell, and I'm the Managing Director of WealthyMe. I'm also a certified financial planner professional. WealthyMe is a next generation wealth advisory firm. We help clients thoroughly plan for any financial goal, and we do this through uncomplicated advice, no unnecessary jargon. We do it virtually or face to face. Preferably at the moment, we do virtual consultations. Our our advice is technology driven, yet guided by an experienced professional human being. And sign up with us is quick and paperless. Today, we just want to say thank you so much for tuning in. Don't you please want to subscribe to our YouTube channel, like our Facebook page. Thank you so much for sharing our content, commenting, and sharing this content far and wide. It really has an impact on those that receive or at least listen to these posts. Today we want to chat to you about investments, and this is just factual information, it's not advice. We want to speak to you about the core differences between a retirement annuity and a tax-free savings vehicle. These are two vehicles that can be used to create long-term wealth in your financial portfolio. And each vehicle has its own unique benefits. They share some of the same benefits. And so when you are evaluating a vehicle to use to save towards retirement, you have to consider some of the benefits, or at least compare the benefits. In my personal opinion, both of these vehicles have a place in planning for your retirement. So what are the major differences between the two vehicles? Let's start off with a retirement annuity. A retirement annuity is an investment vehicle whereby you contribute on a monthly basis towards your retirement, which is regulated on this particular product. So you can only access your funds in a retirement annuity at retirement, which is age 55. The only other way you can access the funds is when you immigrate, or when you die, or if you become disabled, you would be able to access the benefits. But in essence, how this vehicle is structured is your monthly contributions towards a retirement annuity is tax deductible. So what this means is, if you're contributing towards a retirement annuity, you would qualify for a tax deduction at the end of the financial year, which means SARS will give you money back for contributing towards this. Why do they incentivize you? Because government doesn't want to have the burden when you are old or age to still look after you. They want to incentivize you to make provision for yourself. With a retirement annuity, the growth within the investment vehicle is also tax-free in the vehicle. So as your money is growing within the retirement structure, there's dividends that gets paid into that investment. There's interest that is being earned, maybe rental income that is being earned in your portfolio, and also shares are being sold in the portfolio. And when shares are sold, there might be capital gains, which generally would trigger capital gain. In this case, your retirement annuity doesn't pay capital gains, so it's a very tax efficient investment vehicle, right? And by virtue of that tax benefit, it accelerates the growth in your investment. The other beautiful thing about the retirement annuity is that it cannot be attached by creditors. Let's say you're in business and you run into business problems. Creditors won't be able to attach a retirement annuity, whereas they can attach other assets to recover what you owe them. Now, with the retirement annuity, The catch really comes when you get to retirement, because you get all these tax-free benefits, but when you retire, you obviously can't take your full money as cash. You can only take 1/3 as cash, and then the other 2/3 you need to buy a compulsory annuity, and that annuity is the structure that will pay you an income during retirement. And at retirement, that annuity that you take on a monthly basis will incur a monthly tax. The lump sum that you take, a certain portion of that lump sum is tax-free, and above that amount, which currently stands at 500,000, you will pay tax on the lump sum. Now, when you look at a retirement annuity, there's really no limit in terms of how much you can contribute towards a retirement annuity. The only limit is the total amount that is tax deductible, but you can contribute any amount, any lump sum into a retirement annuity without limitations. On the other hand, now let's jump onto a tax-free savings, right? Before we jump into tax-free, the last thing is with retirement annuity, the money is, there's no liquidity in a retirement annuity. You will never be able to take money out of a retirement annuity other than when you become disabled, immigrate, or you die. So the money can really only be accessed when you retire. With the tax-free savings investment, this is an amazing vehicle that government introduced to encourage savings in our country, is that with the tax-free savings, the contributions into your tax-free investment, those contributions is not tax deductible as with a retirement annuity. However, the growth within that tax-free savings is tax-free. So if your investment is earning interest, dividends, capital gains, rental income, there's no tax that is being paid on that growth, which is a phenomenal benefit. With the tax-free savings investment, you have immediate liquidity to the investment. So if you run into financial hardship, you would be able to access funds in your tax-free savings investment, right? The other thing with a tax-free savings investment is that when you get to retirement, let's say you use this vehicle for retirement, right? You can take out the entire lump sum from your tax-free investment without any tax implications. And that is a great benefit to have. But there are limitations with tax-free investments. And the limitations really are with regards to contributions. How much can you contribute to a tax-free savings? At the moment, you are allowed to contribute 36,000 Rand per annum. Anything that you contribute above 36,000 Rand will attract a tax penalty of up to 40% on the amount above 36,000. So if you take 36,000, it means that's 3,000 Rand per month that you can contribute to a tax-free savings. And then the lifetime limit in a tax-free savings is 500,000. So if you take 500,000 and you divide it by the current 36,000 annual limit, it would take you approximately 13.5 years if you're contributing the maximum amount of 36,000 per annum to reach that 500,000 Rand lifetime limit. So those are some of the important factual stuff that you need to consider as you plan for retirement and as you use different savings vehicles to retire and plan for your retirement. But like I said, these things have a place, and both these products have a place in your portfolio. My advice would be, before you make any decision on these type of things, seek advice, speak to a professional financial planner. You can also reach out to WealthyMe, and we would be able to assist you. Thank you so much once again for tuning in to Wednesday Money with WealthyMe. Have a lovely day and God bless you. Bye-bye.